Good morning, everybody. How are we today? Ding ding. No, the market's closed. Make sure I got everything opened up here. All right. So we're gonna probably do the usual, cover some of the memes. We do have ETF FTDs coming up this week. We'll see which one of those could run. And then we'll get into the Mag 7 and then some hopefully we can get that done quick. And if you guys have any questions about stuff you're looking at, I can take a look at that before we get the quants on and we do VIX, SPX, macro, all that. Got to get the story about the guy who busted his Vision Pro. Yeah, so I was at this place in Tribeca called Nancy Whiskey Pub or something like that. I was pretty drunk. I think that's what it was called. Anyway, there's this fucking like Chad dude walking around showing off his Apple Vision Pro to everybody. Um, and then he was like outside smoking, and he walked into the fucking side of this apartment building. And busted them. It was pretty funny. He looked like he was about to cry. But I mean, it wasn't. I guess it's not that interesting. Anyway, 5K Monday, and of course I laughed. I laughed my ass off. Who the fuck wears a $5,000 VR headset to a bar? Like, it's not show and tell. Chad, dipshit. The guy with the smallest wiener in the room. Look at the expensive things I can buy. Um. Anyway, let's. I guess we'll start off with the memes. Do GME first. So GME is starting to get almost illiquid enough that it could run. Um, Getting a little bit of bullish consolidation on the downside here. And I think on the options side of things, there's been a little bit of an improvement over the last couple of days. Now, let me double check here, but I think, let's see, for GME this week, ETF FTDs, Friday we were supposed to have 2 million, and then we have 1.6, 1.5, 1.4 over the next 3 days, and then they fall off until we get to March. So I guess 12.9 has like half a mil, a little more than half a mil. 12.13 has like 700,000. So actually not too bad as far as count goes. Obviously, as we know, the total count of failures is not necessarily representative of any kind of change in price action, but it is like I said, pretty illiquid. They've been shuffling around the liquidity a bit, probably due to the overperformance in R1K. So R1K has been doing pretty good over the last week. Most indexes are up, so there's a lot of pressure on what little short position there is, right? And hopefully that can lead to a bit of price improvement. I would say that on the option side of things, we've got a little spike in gamma max and delta neutral going into the end of last week, and gamma neutrals kind of starting to flatten out a bit, which is usually a good sign. Gamma's positive on GME, and the adjusted dealer gamma is just barely negative. Over the last few days, we've seen sold puts pick up a bit, but total call interest really hasn't gained or declined. So not a ton of bot calls, but a bunch of negative charm fell off, and so that could kind of get things rolling a little bit. And we are just above delta neutral, so covering on GME right now with the market maker supporting the downside, I think is a good situation to be in for a little bit of price improvement. Now, I don't think we're going to see the highs that we saw. I don't think we're going to see the highs that we saw back in December. But we might get something. We might get something a little lower than that. Gamma max is around 19. But generally, ETF FTDs don't run to gamma max. So I would say maybe 3 days of price improvement. Maybe we test 17 to the upside, and then probably back down further after that. Yeah, so that's about it for GMA. Not super impressive, but the number of FTDs is decent compared to the last year and a half. It's a little higher than usual. Now, what does that mean for OPEX? Probably not much. We're probably not gonna, if we like XRT's not on reg show or anything like that, we're probably not gonna see a lot of additional covering into the OPEX period. It'll probably just be the ETF FTDs and then shorted afterwards. What's up, Carl? Girk's in a red shirt following the Ron Swanson line of logic. That means Girk got it in last night. Nice. Thanks, Carl. Do you have relatively high confidence in price action? Odds they boof it. So the biggest thing you worry about with ETF FTD covering is that the indexes don't support it, right? So if you've got net sellers on actively traded funds, you're probably not going to see a lot of price improvement. But if indexes continue up next week, which they've been want to do as of the last 15 weeks, then that positive pressure can be exacerbated by the failures that need to be covered. So basically, you can kind of think of ETF FTDs as either they'll protect the downside in a falling market scenario, or they'll amplify the upside in a rising market scenario. As far as boofing it goes, yeah, it's going to probably be largely dependent on that. I mean, I think positionally it's in a good space. It's not below delta neutral, which means the market maker is buying the dip. That makes the upside price action, or the upside price action should be a little more resilient. I mean, generally for me, this period kind of means like don't have covered calls open and look for an opportunity to sell covered calls. I generally don't try to play this to the upside. Sometimes I'll use it to sell like some spreads on top of the cover calls, depending on how liquid the chain is. I don't know if they're going to short it in the AM. They could. That's the kind of thing you gotta deal with as it comes. Next up is Upstart. So Upstart started recovering a little bit at the end of last week, and now this one actually looks pretty decent on the options chain. I think sold, so not a lot of call interest picking up on it, but that's usually true when it runs. But lots and lots and lots of sold puts. So no, I don't think it's going to run to like Gamma Max or anything, which is at about 40. But it is holding pretty stable just above delta neutral, gamma neutral. So choppy because of its illiquidity, but a little bit of price improvement could be expected. I know there's a decent concentration of call interest at the 35 strike, and also a little bit at 37.50. So that's, you know, like $5 of range probably. The only problem with Upstart is it's so massively illiquid that sometimes your upside moves are very brief. I know some people who are long Upstart this last week found that out the hard way. When on Wednesday it spiked to like $35, and then a few minutes later, you know, it was back at 31. That's just kind of the nature of this stock. You gotta get out when the and sometimes that means that, you know, you miss out on more upside move because if it does get a continuation. But yeah, you got to kind of just get out when the getting's good. Otherwise you could get burned really hard. It helps if you can nail the bottom, but I don't think anyone's going to be doing that at this point. Um, as far as FTDs on it go, it had 2 million on Friday. It's got 1.5, 1.4, 1.5, 1.2, 1.6 over the next 4 trading days. So pretty constant pressure from that. Another thing to look at with Upstart is bots. Um, Bots is pretty liquid right now. So largely because like it's overweight, right? People are buying a lot of Nvidia. They've been buying a lot of Affirm, and that kind of squeezes all the shorts out of the ETF. So if Nvidia keeps running, that can be a positive sign. But if Nvidia fails, which it may very well do, then I would be kind of cautious about trying to play the upside on Upstart. So keep an eye on Nvidia. Keep a little bit of an eye on, you know, Palantir, Affirm, SoFi. Those tend to be the other ones that are also kind of in that same basket. Upstart's just the most illiquid in that basket. But if those are all performing well, that can apply a lot of positive pressure to Upstart, and then the covering of the FTDs can amplify that, right? I don't think this period's gonna have a lot of positive covering on XRT. XRT is not really in that bad a shape right now, so it's kind of hard to say how much effect will be there. And also, as XRT becomes more liquid, they're more likely to start shorting it, right? So yeah, I don't think XRT is a good play here. Generally speaking, this is not a great time to play XRT. I guess if IWM continues to move up, although it shouldn't, right? And Friday it underperformed a lot. Higher rates should be bad. But yeah, I guess if you see IWM overperforming, maybe you'd want to go get long XRT, but even then, it just seems we might as well just go long IWM. Yeah, I don't think I hate the MM on GME. That's fair. Maybe like bull puts on GME, since ETF FTDs don't necessarily mean up, but they're fairly protective of downs. The only problem is you've got to pull them early, right? You probably won't be able to hold them into expiration. So that might be something to consider. Macy's top is so top filed an 8K. They're gonna be they've got an accountant. They should be releasing their earnings report and their restructuring plans before the NYSE delisting is official. So I guess we're waiting till probably early March on that. It looks like it's had the fuck shorted out of it. And with another month delay, we might see like a small covering period like we saw earlier, just for shorts to establish a little more liquidity. I'm not sure how much price improvement that'll give, but I don't see it getting much more short than it currently is without some covering. Now that might be realized all at once, or just like, one decently volumetric day, so they can kind of get it back into a range where the price is a little bit more stabilized. But this big short away from trend after months, and the amount of liquidity they've tied up doing it, this might just mean that they need to do quite a bit of covering. It's been several months, and I'm sure that T69 pipeline's pretty backed up. As far as failures on it go, I don't think they're super impressive. I think there were a couple days where fail to volume ratio, yeah. So like fail to volume ratio on 1-2 hit about 10%. And it's been, pretty consistently around 1 or 2% most days. A few days at 0. And then there's a few kind of days where it breaks to the upside of 5% fail to volume. But the underlying is not trading a ton of volume. However, on the ETF FTD side, there's quite a lot of fails. 2.7 million last Friday, 900,000 tomorrow, 1.4 million Tuesday, 3.5 million Wednesday, 2.5 million Thursday, and 3 million on Friday. So, and then there's like a day where they drop off down to 500,000, and then the following Tuesday, prior to OPEX, it looks like another 2.5 million. So quite a lot of ETF FTD fails here. And given how hard they've hammered the ETFs, I would say that there's probably at least some that are going to be coming due on top. So I would probably either look in the money, or maybe like consider selling like $1.50 put spreads or something like that. I'm not really sure how puts are priced right now for it, but they're usually a pretty decent yield. Let me take a look. I don't think debit spreads are really worth it, because the out of the money calls are going to have no value. But let me see. Um, the $2 call spread's kind of shit. The bull put spread. The bull put spread's not too bad. Like the $1.50, $2. for Feb 9th is 37. And then, if that doesn't print, you can always cut it. But that would be long the 150 put, short the 40, the $2 put. And that's well, above $2, that's 74% return on collateral, or 285% of max risk. It's not bad. So that might be worthwhile, or like the cash secured put at $2 might not be too bad. I think that's about 45 cents. Even at $1.50, yeah, $1.50 kind of sucks, but $2 is pretty good. Obviously, some risk there that you could get assigned and end up owning this right before it goes bankrupt. So keep that in mind. Also, try to keep pin risk in mind for any short-dated spreads, especially if you're selling them in the money like that. After top, what else do we got here? Oh, Beyond. So Beyond's getting kind of interesting, actually. Beyond fell just below. So previously I'd mentioned there was a price where I would be looking for Beyond to drop to before I started adding some. And it's starting to get there. It hasn't quite crossed over, but it's about to. And it's about to hit kind of a period like it saw here previously. And this is the point at which the dealer is long Vana. Kind of like Hum. Hum is a recent example of something that we've looked at like that. So below, right now, I think it's below 641. Nope, 630. So below 630, the dealer's going to start being short Vana, which kind of means that the dealer is going to go long shorter dated puts as volatility increases. But if it bounces back up through that, it can create like a short squeeze. At least a temporary one. As we saw here, it bounced back above it. It kind of chopped for a little while, and then, it rocketed up. So I think once it goes below that level, that's not such a bad place for entries. I mean, if you'd bought, it stayed below that level pretty much this entire time. Before breaking out here, and this is when it broke out. And so, any entries throughout this period would have averaged like about a 50 to 65% return roughly. So that's where I'm looking. I'm gonna be looking to buy, and right now that level's at 630. So below that, and I expect it'll end up back on Reg Show. Actually, I think that's exactly what happened back here, is when they finally got it shorted below that, and it went on Reg Show, and then it stayed on Reg Show kind of all the way through here. So I would expect something similar to happen again. It's definitely getting about as illiquid as it was here. So there's still some more liquidity to short it down. But I think as long as indexes keep running and positive pressure stays on IWM, then this shouldn't be such an issue, right? A lot of this drop was because IWM fell off really hard. This was like the tail end of the big drop in October. And that provided a bunch of liquidity for them to short with. If IWM doesn't do that this time around, the price realization or improvement might be realized a bit sooner. I think that's it for the memes. Any questions? We're going long VTI. Nice. Here at all-time highs. I'm not playing Chipotle earnings. Have you seen interest on NVIDIA? We have some insane consistent interest on NVIDIA up to like 1100. I have, and I kind of want to sell the fuck out of those calls. I know the BNet has nothing on the FTD side of the stack. I also assumed it's not in the ETFs. Yeah, it's not like an FTD play. Are these raw dog short positions? Yeah, mostly. It doesn't have a lot of. I think it's in like 2 ETFs. So it barely has any ETF exposure. I can't tune in, but I want to get that question in. Which question? Sorry, did I miss it? Can you take a look at Agilent? Looks like some nice accumulation over the last couple of days. Hold on, let me go out a little further. I'd go long if it breaks that trend. Life sciences and applied markets. I don't know if you're looking at this for like a long-term investment, but I mean from a technical perspective, a breakout of that trend would be pretty good. And its last earnings and improvement in margins seem to support a breakout there. Margins climbed a little bit higher than they've been over the last year. So I would say it looks like it's got some decent upside. K-View? Yeah, I could take a look at K-View. It hasn't been doing much lately. I've just been selling $20 CSPs and collecting dividends. And it's not a very exciting stock. Stable though. It seems to have stabilized around 20. I don't think it should ever really be worth much less. Is Beyond a meme stock? I mean, it's done meme things. Or BNED. It's done meme things in the past. But I think that's just maybe because it's illiquid and it has a bunch of shorts on it. Agilent sells equipment for laboratories. They dominate almost all the government contracts. Well, it looks good. And it looks good as like a swing trade. They make a lot of warranty on money and repair. On warranties and repair. Okay. I'm usually in a pretty good mood, Lugs, but thanks for noticing. Did you already talk about Fubo? I haven't yet, no. Fuck, hold on. Fubo's a little more shorted than it was 3 weeks ago, but barely. I don't really know what to say about this. It seems to be tracking with IWM, but the short positions don't seem to be piling in on it, which might be a really good sign with its next earnings coming up. That would make 4 consecutive earnings where they, or one whole year of taking positive steps towards their plan of positive EBIT. Um, Seeing the shorts pull back like this could be indicative of a move higher or a revaluation. It should be getting close to that point. I mean, every quarter for the last 3 quarters, they've made pretty significant improvements. I'd like to see them keep that up. If they miss, I would look to that as being a buying opportunity. But if they don't, yeah, I think it might start moving up into like the $3, $4, $5 range. So I would not be carrying covered calls into earnings. But it doesn't appear that shorts are really piling in very much here. Any hum potential, or is that in limbo? I kind of want to. I kind of want to go over the Mag 7. I've only got 30 minutes, so let me cover the Mag 7 stuff real quick, and then if I have some time, I'll do hum and some other ones. Because I'm already getting off track here. Uh, as we know, Apple showed probably the worst earnings performance out of the Mag 7 besides Tesla. They still beat on EPS and revenues, but they show a pretty significant decline in sales across the board, especially in China, which has been losing sales quarter over quarter for about a year now. If you aren't aware, Chinese consumer sales represent a very significant amount of Apple's total revenue, and losing market share there is pretty bad for them. And mostly it's not due to something that Apple's really in a position to currently prevent. Right, they're mostly losing market share to new technologies and new form factors on phones that the Chinese market is finding preferable to the iPhone. Obviously, it pulled back a little bit with earnings and recovered on Friday. But uh, as far as the options chain goes on Apple, it doesn't look so hot despite that recovery. Um, Charm is going to be going into this week just a little bit negative. Adjusted dealer delta exposure is still negative. Gamma was falling negative into the end of the week. Probably would open Monday slightly negative. And it's just sitting above delta neutral. So Friday it kind of bounced off of GN, broke out above DN and held, but it could slip right back below delta neutral again, and that's at that like 183 level. If it does, and kind of completes this really sloppy head and shoulders you see here, I would expect that it could fall back to trend or even below the trend over the next few weeks. It's not going to spook most Apple investors, but it should spook some, and I don't think their narrative about approaching AI is going to help them that much. I think a lot of the saying AI 500 times during your earnings call momentum they kind of missed out on. And so Tim Apple's a little too late to that party. Although if they did establish some AI products, that could be a risk for the upside. But right now, yeah, the options market doesn't look particularly supportive, and I've noted in the past that generally the Apple options market kind of swings bullish to bearish, and it takes a very long time to pass through these phases. Like, it takes a really long time to accumulate a lot of bullish positioning. It takes a long time to lose that positioning, and then once it does, takes a long time for it to reaccumulate. So now that it's kind of nearing bearish territory, it may be kind of stagnant to bearish for some time, like maybe, you know, a month or so, before enough bullish positioning comes in that it's, you know, primed for another run to the upside. Although it is getting a bit more volatile, as you can see post earnings, that shouldn't last. Generally, the volatility on Apple falls off pretty quickly. Amazon beat, kind of expected them to. I think out of the Mag 7, they were largely one of the more underpriced. And I think 170 is a little bit closer to a fair valuation for them given their revenues. You know, remember they're trading, you know, they're trading 500% lower than Nvidia, but they have 6x their revenues. And, you know, a lot of that is because Amazon spends a lot more money than Nvidia does. But yeah, I think earnings was in line. I know AWS lost out a little bit on cloud services, and some of that business went to Microsoft. Some of that business appears to have gone to Google Cloud as well, which, you know, despite no one actually using it, seems to be performing a little better. And that may be actually a signal that small businesses and startups are looking for savings in their cloud services, which is something that AWS and Azure don't really offer. And I think if we start to see a lot more people turning to Google Cloud Services or other cloud service providers, that might be a sign of, you know, capex shrinking over the next 6 months or so. So something to keep an eye on is like an incidental part of all these earnings, is, you know, when businesses are flush with cash, they're going to go for the premier product, right? But when they're pinching pennies, you know, you might start seeing interest pick up in things like Google Cloud Services, which is kind of like a like secondary or tertiary cloud service provider, right? So keep an eye on those. Also, you know, in security as well, that might be another sector to look at, to see where, you know, that services capex is going. Uh, Obviously, like, you know, Snow and CrowdStrike and stuff like that are a little bit more. I mean, some of you guys are actually in the industry and probably have a way better idea of this than I do, but they're a little bit more expensive. And so if you start seeing more and more businesses turning to the cheaper alternatives, that may be a sign that, you know, the revenues of these companies aren't going to continue to perform the way they have been. Uh, on the options chain for Amazon, last week we'd mentioned 170 as being kind of the upside target for a positive earnings. It was. Um, it's right at Gamma Max. It could push through higher, but the fact that it didn't on Friday when it had all that momentum makes me think that it's not going to push higher than Gamma Max. Amazon tends to be pretty liquid and very rarely spends any significant amount of time above that level. I will say that call interest picked up. Delta is positive, Gamma is positive, Charm is positive. So into the end of this coming week, everything looks pretty good on Amazon. Besides the fact that its upside potential might be slightly capped by Gamma Max, I think it may continue to just push into that, which means upside, but probably slower upside. Um, I would say, unless the markets pull back, then this is kind of headed on that trajectory into this next week. There's a couple ways to play that. I would say bull puts are probably an easy one, although the value here may be lacking. You might be able to go, you know, 5-10% above Gamma Max and look at bear puts or bear calls. The other option would be, you know, an at the money or slightly in the money bullish debit spread. And what that allows you to do is just kind of capture that slow grind up without, you know, exposing yourself too much to theta like you would on a just a straight up call. A straight up call would be an option. I mean, it's almost bullish enough for that. If it wasn't at gamma max, I would probably just buy a call. But because it is at gamma max, I want a little bit of protection, and so I'd probably look more towards the debit spread. I guess you could also kind of weight a condor one way or the other in case it flatlines against gamma max, or yeah, maybe like a slightly bullish condor, something like that. I would say not a skip strike butterfly, but maybe like, well, no, you could do like a broken wing, with like a, you know, narrow upside target. That could be an option also. AMD. So AMD did not beat, but fully recovered. um, they actually guided down for the year. I mean, this is just pure speculation that at some point they're going to be competitive in the AI chip space, regardless of what they think about their future earnings. The market thinks they're going to beat them, um, which is fair. I mean, frequently AMD is not very is not very bullish on itself. Their earnings tend to be pretty forthright, and I would say it's possible that they still beat regardless of their guidance. They tend to underguide. Lisa Sue's always done that. So there is some reason for the speculation, but after earnings, you know, it fell back below gamma max. Gamma max currently is at around, oh, looks like it's around 185. So there's still some room to the upside there, but delta and gamma both kind of slumping into the end of the week, falling flat. Those didn't really pick up on Friday very much. Um, as far as bought call delta, that fell off as well. So it looks like a lot of calls are being sold above 180 here, and that might be the best play on it, honestly. Like a 185, 180 um, bear spread or something like that. Might be the best way to capitalize on this. I do think over a few more days it may continue to fall off a bit more. Now that the rest of the earnings are kind of out of the way, but it may not fall off a lot until Nvidia's earnings are passed, and so it could trade this upper range for, I think, quite a few more weeks. I think we still have several weeks till Nvidia's earnings. So um, yeah, but I wouldn't go long here. It doesn't look like a good long. And it looks kind of like neutral to down. So I would say bear calls, far enough out of the money that they can be managed in case any news comes out that spikes the price. Next up, Google. Google recovered quite a bit Friday, although I don't think it should have. Give me 1 second here. Yeah, this is kind of interesting because all of these are starting to diverge a bit. There's an increase in call interest on Google, bump in gamma, bump in delta. If it breaks out back above 146, it gets pretty bullish from there. And that's only $3 out of the money. Um, I don't know about filling that gap, but filling some of that gap maybe. And then if it stays below 146, however, it's probably likely to start falling towards GN, which is about 133. So I wouldn't get anything on it right now, or I would straddle it and wait for a breakout or rejection from the 146 level, or maybe just straddle it at the 146 level. Um, and then if it breaks out above, you cut the put. If it breaks below, you cut the call. Um, but yeah, so this looks slightly bullish here. This may be a good opportunity to sell puts, but I'd wait for that retest of the 146 level first. And that'd be about right. Yeah, that's just right here. So that would still mean filling the gap slightly. So I think it probably retests this over the next 2 days or so. And then after it retests this, I would look for it to break up or down. This is probably where I would take a position, or I would wait for it to, break down and then take a position, or break up and then confirm, right? So either way you want to do that. You might be a little bit more profitable entering at resistance. But probably not a lot more profitable than just waiting to confirm it. Meta, it's definitely blown out, right? A little bit harder to judge because there's so much buying in the underlying. But with its massive breakout Thursday through Friday, surprisingly, shitloads of delta fell off of the chain. So I think a lot of profit taking on leaps, calls, things like that on Friday. Pretty big spike in put interest on Friday as well. So this may be a top. It might have. I mean, it definitely overreached. It's significantly above Gamma Max. Gamma Max on Friday was at 443. It's trading at 475. This is somewhat similar to behavior that we saw on Nvidia back when it had that second earnings that really went fucking crazy. I think it was it was back in May. And it's Gamma Max eventually just came up to meet the price. But there were some pretty significant pullbacks. I think it hit a high of like 420 at that time, and then a low of like 378. So there could be some like short term put plays here due to the spike in puts, that may be worthwhile. Like it might collapse down to like 450, and then Gamma Max comes up to support that level, and then it kind of trades flat and then starts to improve in price after that. But it's definitely a little bit blown out. So really risky to try to play that, because those moves could be really fast. They could come in the pre-market. Um, you'd be taking on a lot of risk to try it, but there could be a lot of money made in those plays, right? I mean, if it collapses like $25, it's and then stabilizes and recovers back. That's a huge play, and Vol's crushing out a bit now that earnings is over, so you might be able to get those options a little bit cheaper. But besides being blown out like that, the options chain looks and the puts coming in, the rest of the chain looks pretty bullish. I mean, Delta moved to positive, Gamma's still positive, Charm is fairly supportive. Probably will be until Feb OPEX, which is where the majority of those like speculative call positions were bought, like Feb 16. People trying to dodge that earnings IV pump. So yeah, I would say wildly choppy between 475 to 440 over the next week. Definitely not safe to sell options on. And if you want to try to play the price movements, it's going to be more akin to scalping than having any confidence in the trend. And then once the options market starts to stabilize a little bit into the back half of the week, we'll kind of see where it stands. But for now, it's going to do some weird shit probably. Um, some of that may be profitable. Microsoft, not quite back at all-time highs, but it's probably going to push there. This is something that's not, I will say, not particularly reliant on its options market in order to move up, but Friday showed kind of a drop off in call interest, a little bit of a pickup in put interest. Charm, gamma, delta, pretty flat. Um, Probably just slow growth along trend, unless markets slip substantially or some kind of news comes out. I would expect this will just recover its previous uptrend and continue higher. um, that's something you could play with a debit spread if you want to. I don't think there's necessarily a lot of value in that yet. This one doesn't really interest me either way. Bull puts with theta might be good here. That might be about it though. I don't, bull puts or bull debit, like call debit. Um, that'd be kind of all I would be interested in on this. Just standard like bull market positioning, slow growth. Netflix is getting kind of weird. Obviously, it got way too blown out after its earnings, which weren't really that impressive. Um, However, Netflix isn't really a quick mover. Um, I mean, at least not in terms of volume. It tends to be really gappy. And it looks like that's going to continue. Delta has been falling off here very, very rapidly. So I do expect this will turn down, but it could take a few weeks. I know most of the bot call delta on it fell off over the last 3 days. So people are selling all of their calls that they're up on. This is definitely a selling the top scenario. And I expect it'll go down, but I don't know how much it'll drop before it finds support. Um, a level I'm particularly interested in it crossing is 550, which is where gamma neutral currently is. Or delta neutral is down at 488. So still tons of range. I know we a little while ago we were short this, and I said if it moves up, it's gonna take a while to break down. But I'll let you guys know when I think it's starting to. I think it's starting to. I would not approach this with a short dated puts. I would want probably at least 30 days. If I had debit spreads, maybe I'd go 21 or 14 days, but it may still take a while for it to fully break down. But if it does, I mean, those downside targets at 550 and then beyond 550 at 480 490 are very very attractive, right? So yeah, that's getting kind of bearish on Netflix. Probably gonna write up a little something about it tonight. But I think that one's run is just about done. Nvidia. Uh, what's there to say about Nvidia? Probably not much. Probably just keep going up forever. Um, it smashed into Gamma Max again Friday. It doesn't seem to have any problem just sitting on Gamma Max and continuing to push up. Bullish Delta looks good. A little bit of charm fell off on Friday, and puts are starting to pick up, but I wouldn't say sufficiently enough yet to confirm a rejection. This does not look as bearish as the rest of them do. And it could very easily just trade flat this week. I probably wouldn't touch it. If it got rejected off 675 in a significant way, I might consider selling some like weekly bear call spreads above 75, or taking like a small short position into SLD OPEX, but I would wait for that 75 level. That's where the concentration of interest is right now. And you definitely want to confirm a rejection there, because if it breaks out at 75, it's going to squeeze the short calls and push up to 700. All right. And then Hum, we can cover Hum. I'm done with I got a couple minutes, So I got out of Hum at the end of last week. It kind of had some price improvement, but it was mostly choppy over the last 3 days. Definitely not the price improvement it had over the first few days, when I first went long. It was a good play. I think this is probably going to turn back around negatively. It doesn't look particularly good. Volatility sellers are going nuts, taking advantage of the spike in volatility after the bounce. They're selling shitloads of calls at 70, 75, 80. And that's, that's crushing the gamma. Delta's dropping off. Charm's pretty flat, and bot call interest is falling. So I think this is kind of peaked after its bounce. It's still in very negative delta gamma territory. And if it starts to fall, if it falls back below like 365, it gets very, very bearish again. So there's an opportunity to play the short side here, I think. But you may want to wait out a more confirmed rejection or a breakdown of that 365 level before entering puts. Either that or get a lot of theta. There's still a potential that the call side could catch on more strongly and push up higher. So, yeah, I would probably give it a little bit and kind of see more definitively which way it's going to go, but I'll update you guys on that one. It's definitely what I'm watching, because it can swing so bullish and so bearish so quickly, that it's a really fun options play. All right. What's your outlook on oil over the next few months? I think oil's going to continue to push up. I don't think any ceasefire action with Hamas is going to last long, and I think conflict escalation between the U.S. and Iran and Iranian-backed militia is going to continue or worsen. It doesn't seem like there's a short-term solution in sight for that. So I think I pick up DVN shares over Oxy, mostly because of the dividend. That's fair. Just remember that DVN's a little bit more exposed to nat gas. Like, DVN will perform really good if nat gas and oil pick up in price, but if it's just oil, Oxy will beat it. I understand the dividend's attractive, and it's not bad. I mean, I collect a dividend on it, but I haven't bought back into DVN, and added to my position and ever. But if I were to, it'd probably be around the $40 range. I think that we're through most. I think we're through the worst of the winter right now. I mean, we still have a few more weeks, but I don't think we're gonna see a big spike in nat gas prices until like end of this year, or any repricing in nat gas until the end of this year. So I would say that there's no rush. And if you want to just target oil, go with something that's more exposed, like ZOM or Oxy or Valero or Chevron. Because the growth they offer in oil will probably outperform the dividend on DVN, which is much more tied to natural gas. If you had to work for one of the Mag 7, which would it be? I don't know. Nvidia has like the best stock options, right? Oh, I didn't go over Tesla because it's such a piece of shit. My mistake. So Tesla, as we know, caught a bit of a bullish or a bearish reversal here, and kind of bear rallied off of the big drop from earnings. That kind of petered out around the 196 level. It still looks pretty short. I know it bounced up a bit on Friday, but also lagging everything else. I'm not sure if it's quite ripe to enter a short position on it yet, but Gamma and Delta are still negative, Charm's negative, and calls continue to fall off the chain. So, and it's in a negative Gamma environment. Um, I would say if it's going to make another leg down, to oh, probably like the 165, 150 level, then it's likely to do it sooner rather than later. But this is definitely, the momentum on it's going to be slower now. So I would say you probably would want theta if you're going to short it from here. Not a bad short, but you probably want some theta on it. I bought Jan 25, 300 puts on NVIDIA. They're cheap. I don't know if it'll be enough time. Um, I want to say it will be, but 300's a lot of, that's 50%. It's got to drop. Not that it can't, it could. Um, I still think they'd need to miss like 2 earnings to drop that much. So they'd have to miss one, and then they'd have to miss one really, really badly after that. Not impossible, but hard to say if it'll be that soon because of their ability to pad those earnings so effectively. And the fact that they've still haven't even cut out the like Chinese revenues, which apparently they're going to get back, and that's going to get blocked again, and then we got to go through that whole cycle, right? In the meantime, um they're going to keep reporting those Chinese earnings, right? And that's a pretty significant amount. It's about 20%. Outside of that, I mean, the veterinary clinics and stuff that are the major purchasers of the H100 chips, continue to just spend. So we'll have to wait and see. We'll have to wait and see when that all comes crumbling down. But I would say, don't target more than one missed earnings this year. And one missed earnings is probably only going to result in like a 10 to 15% loss. Now, if they do miss that earnings, then you can target another miss, right? Then you would look towards those 300s. All right. Let me see what the quants are up to. Oh, I gotta mute them before I turn them on. Otherwise, they're gonna say all kinds of shit. What's up, guys?
The stink went away, and it was wonderful.
Get you?
Did I get you?
I mean, I unmuted part of that just because I wanted to hear about everyone to hear about you putting it in your butt and the stink. But I think the put it in your butt part got cut off.
Oh, damn it.
Yeah. But
Well,
you tried,
I did put it in my butt.
What's going on? What does everybody care about this week?
I don't know what anyone. I mean, I've fully given my body and soul over to the bull run. I'm just going to buy calls at market open every day, never close them. And then I'll use that money to buy some puts that expire next year.
You just sell bull put spreads and buy bullish debit spreads and just hang out on that.
Interesting. So just all
Just
long.
lever up.
Yeah, I
Yeah,
like
just
it.
long,
Just
long as fuck.
long as fuck. No, I mean, obviously the rebound last week was odd. It definitely wasn't driven purely by earnings, right? It was far more mechanical in nature. I mean, the net after earnings was over, the net price improvement was minimal. It was like 100 billion, and then we were up like Mag 7 was up like 500 billion by the end of the day Friday.
Yeah, 500 billion in a day. It's pretty impressive.
Yeah, not bad.
Well, more than a third of that was fucking Meta jumping up to the moon.
Yeah, yeah. It looks like all the money from somewhere like RRP went into Meta or something. Um, they picked up a lot of market cap really, really fast for what I can only determine is no actual reason. They still
They
they still make
announced it.
less money than they used to, but they're worth a lot more. So,
They're a value stock, Girk.
oh yeah, I forgot about the 50-cent dividend a year.
Yeah. Also,
Yeah.
Girk,
They're basically
their
a Dow
yes,
Jones stock.
their earnings are flat-ish relative to 2021,
Okay.
but their innovation is higher.
Yeah,
What
they're
are
just
they?
getting the PI better. You know, it's all
Oh,
about the PI
I
ratio.
forgot. What are they innovating?
Well,
Nothing.
first he was spending a bunch of money on the metaverse, and investors didn't like that.
Yeah.
But investors like AI, so now he's burning a ton of money on that, and that makes the investors happy
Well, no.
Okay.
because he's burning money on the thing that they like.
So
Interesting.
investors loved the metaverse until they realized he was burning through all their free cash, and then they almost had no money. And
Yeah.
that's what made Kramer say this is thesis changing. However, when they do the exact same thing with AI, investors forget that they wasted a shit ton of money on the metaverse, and they think this time when they waste a bunch of money on AI, it's going to work out different. It's different this time around.
Well, it doesn't matter because the like $40 billion that you know Lizard Boy blew through, um, they're gonna get all that back in that dividend now. He's gonna buy
Yeah,
that back with the money they don't have
you're gonna
anymore.
get that
Yeah.
money back in
Yeah.
what, like
He's
40 years.
also, I mean, there's also a lot more confidence in the management team over at Facebook now that Mark Zuckerberg has been buying and increasing his share holdings pretty much every day for like the last 2 months, I think.
You mean
Oh, wait. Let me,
you have
no.
the? I think you have that
No,
backwards.
selling, yeah,
Selling.
selling,
Yeah.
Well, he was increasing his
selling.
net share by negative however many shares per.
Yeah.
I
He's
mean,
buying negative
this is
shares,
kind of
guys.
like why. Well, hold on. There's a thesis. There's a real thesis there. Like I understand we're shit talking, but I used to get most bullish on Tesla when Elon would sell a bunch of it because it was like one step closer to him being gone. You know what I'm saying? So like maybe that's the like he's selling so much of his stock at these really low prices, like 475, 350 plus.
Yeah.
That he's just ready to retire. He's accomplished everything that he could ever accomplish with Facebook, and now he gets to go live in his bunker that he's building in Hawaii under the
Well,
mountain.
he has destabilized entire nations. He's more effective than the CIA.
Yeah. Give me 1 second. I'll be right back.
I know you just need to take a moment to admire Mark Zuckerberg's ability to take over the world. So JFresh, we get free
We've
reign
been
now.
zucked.
So now that we're here alone, what do we do?
I actually have no idea. I'm a little frightened.
I want to talk about that population thing, but I know we just fucking sniffed it out. That was really cool.
Yeah, I don't know what to do with it.
We should try to back propagate it through some calculations.
I know I've seen some people talking about birth death rates and stuff in the BLS models, but I don't
Well,
know how that factors in.
those birth death rates are actually like forecasts of like businesses, being born and dying, not really people.
Oh, it's businesses? Yes. Then I have no idea what's going on there.
Here, let me
They're just
put a
making
link in
things
the
up.
chat for you.
They put
This
the BS in BLS.
here. This'll kind of make you more confused. Check the dick chat.
Don't call it that in public.
Oh, sorry. The the voice chat. Yeah, this will make you even more confused, and I'm happy I could provide that for you.
Oh Jesus.
Yeah, so just a fun little thing that we were dicking around before you got on, and Jay Fresh was talking about how the U.S. population jumped by a few million in one quarter in 2020.
Yeah.
And so, what we did was we tossed the quarterly population changes into a distribution, and we found out that that change in population was what was it? A little more than 5 standard deviations away from the
Yeah.
mean.
One in a million odds.
Yeah.
Huh.
If you look at the chat, you'll see the first distribution he made, and that little tiny doink right there in the very end of the distribution is 2020.
Okay. Nice.
I don't know what it means or where it's used, but if
Where
they're
did those
plugging
people
anything,
come
it's
from?
probably wrong. All of the immaculate health improvements that COVID brought about.
Oh,
Yeah,
okay.
well, what happened was all these ladies who were carrying just went straight into labor, all in one quarter. 3 million of them in one quarter, just squirted out some babies.
Well, maybe 9 months before that, there was just a lot of fucking going on.
It
That's
must
a
have been, yeah,
lot.
like a giant, yeah, 3 million. So that was 6 million people banging in a one quarter period 9 months prior.
That's not even
Banging like crazy.
more than that. Well, I mean, shouldn't we assume that like more than 6 million people are banging every day? What does the world come to? We have billions of
I don't
people.
know.
It's not that it's that
I
they
mean,
not only bang,
statistically, how many people are
what
pooping
see.
right now?
Half of them.
Maybe you know what it was, Girk, is there
No
was
way.
something in the
You
water
spend
that
on average half of your day in the bathroom.
I mean, I spend 8 hours a day in the bathroom. Where do you think I stream from?
There.
So Kirk, here's what it was actually. So the evil cabal of hedgy lizards
Yeah. Brian
actually put
Moynihan?
something. Yeah, so they put something in the water 9 months prior when the first like whispers of COVID came about that increased everybody's sperm count 60-fold in order to
Okay.
get this population boost.
How many births do we normally have a month? So we
Not
have like
not 3
300
billion.
I
million.
don't know. The population increase also comes from immigration too, so it could have been the caravans. I remember those.
So just like, yeah, I was just wondering if they're just like counting a bunch of delayed data and
I don't know.
you're getting like,
I'll have to get to the bottom of it at some point, but
That's
it
a
seems like
crazy,
the
crazy
least
number.
important thing to focus on ever. So I'm
It's
fully
just
in
so
support of
interesting. It's
this.
5 standard deviations, dude. That's statistically highly relevant.
I mean, I don't know. Maybe it was like maybe Brian Moynihan laid eggs. You know, I've heard the clutches can be quite large among the lizard people.
It's true, yeah. Well, he also has a cabal of flies, which he impregnates.
Oh, okay, that makes
I think
sense.
so. At any given time on the Earth, there's probably my very rough estimate is about 80 million people on the toilet at any given moment.
That's a lot, right? Like, how many people are fucking at any given moment? Do you have any data on that?
I do not.
It's got to be more than shitting, right?
I'd say it's less.
Really?
It might be.
I could have sex
That's an
three
interesting.
times a
That's
day at least, but I can't
oh god,
shit.
come on.
I
Damn,
can't
dude,
shit 3 times a day.
you got a peener of steel.
Your
Holy
ratios are all off.
You just take a Cialis, you go all weekend.
Oh,
I see. Okay, now I know. Yeah, just I thought that was fairly interesting. So I just wanted to bring it up and point out that existed. But JFresh made a post just a little bit ago that I also found very interesting about wealth versus nominal GDP per capita.
Okay.
Uh,
I haven't been on Twitter much this week.
yeah, here I'll take the image.
I see it.
Oh, yeah, so basically what this says is that the top 0.1% have about 740 years worth of nominal GDP per capita
Mm-hmm.
in wealth, and then the like the 50%
The
has
poorest.
about 21%, and then the bottom 50% has about, what was it, like 3 months
They
of
have like
relative
three months of wealth.
yeah.
That's too much.
Yeah, well, at the so it bottomed in 2011. A
Yeah.
couple of years after the financial crisis, and they only had about 11 days of wealth.
That sounds like where we should keep them. Otherwise, they're gonna get frisky.
Yeah, I mean, they were one of the biggest beneficiaries of the two largest beneficiaries was the bottom 50 and the top 0.1%.
Dork
And it kind of
tagged
like
Elon.
he gave it a shot. He's trying to get us fast track to Twitter fame.
We're already Twitter famous.
Are we?
Oh no, not even close.
I'm trying to get JFresh to get like $100,000 a month in ad revenue from Twitter.
I don't think Mr. Beast is gonna get that much.
No, I didn't he make on it. He dropped that one video, and that one video made like $250,000 in ad revenue.
Something like that. But Elon's just overpaying him so he can pick up more
Probably.
influencers. Yeah.
And then he dropped another one to see what happens. Which, I mean, wouldn't we all?
Yeah, of course.
All I have to do is repost.
Yeah. Well, he could get fucked, right? Because YouTube can pull his revenues.
Yeah.
So he's taking like a really big risk by doing that. Technically.
Dude, the JFresh put it so succinctly when he did the thing like where it was like boomers fucking throwing all their money into like social media stocks and tech stocks, and then being confused why all the young kids want to be TikTokers.
I mean, I thought it made a lot of sense to me when I thought
made too
about
much
it that
sense,
way.
dude.
It's
It
like
was
you
beautiful.
follow people follow the money. It'd be
Yeah.
like criticizing. It's like criticizing kids who like skip college to go directly into the NFL. That thing that you watch and pump all of your time and money into.
So I got $1,200 this year from X.
Nice.
My total payments are $1,200. Although I
This
didn't post
year or the
anything.
last 12 months?
It was the last 12 months.
That's nice. Look at you.
But I haven't
You should
posted
do
anything.
that.
I didn't post anything for like 6 months of that period.
Dude, I'm telling you, if you get a revenue stream from X, it would be so poetic if you posted pictures of your revenue stream, and then right next to it is the brokerage order for that amount of money in Tesla puts.
I mean, people have done that. That's already like
Yeah.
a thing.
Oh, okay. Well, never mind. It's not original.
Yeah. You're so edgy, dork.
uh, oh, Dan Ives is posting on Twitter too. This is great. This is
Anyway,
wonderful.
let's just get away from Twitter and talk about things
Yeah.
that don't
Close-
matter, like
close-
JFresh's pool. How's it holding up?
Pool's doing fine. Yeah.
I went
Pool's
to an open house with a female friend of mine who's trying to move out of the city, because she didn't want to go alone because she said the real estate agent looked creepy, and so I ended up at an open house on Saturday, which had excellent cookies. And immediately upon parking in the driveway and exiting my vehicle, the real estate agent informed us that the house would come with a $75,000 credit at closing.
What?
It was the second sentence out of his mouth.
What? Credit? What
Yeah.
does that mean?
That means that they are trying to pad home valuations by offering credits to buyers right out of the gate. And I was like, I was curious. I was like, is that just this house? I was like, are you
Wait, does
offering?
that work? That's like a thing? You just
Well,
sell
that's
the
what they
house
did in
for
China,
like
right?
six
Where they
hundred
were giving.
thousand
Yeah. Oh
dollars
yeah.
on
This is
paper,
this
but
is how
then
they
they
this is
only
how
hand you 525?
yeah.
This is how China's been padding their property values. Remember,
Yeah,
like the gold.
China's been doing this. Yeah, they leave some gold bars in the toilet when you buy the house.
Why is this legal? What?
China
Oh
did
my
this for
god.
like a few years up until their property market started collapsing.
Oh yeah, and wait till we tell you about the 2-to-1 buy downs that are happening on interest rates. So you're getting your interest rate subsidized by the lender,
Yeah, I
so
knew
that
about that.
yeah. So there's that. There's
And
also
the builders, they're
yeah, the
they're
builders are
buying it
offering
down
like
too.
fat buy downs, like fucking 40K and shit.
yeah. Yep, I talked to them about a bit about it, and he said he has about 10 properties in the area, all of which come with a credit upon closing. Two are new construction, which come with a $50,000 renovation package. So you can add like an extra bedroom or do some remodeling on top of like the the
The
halfway,
base builder
yeah, like
grade stuff,
the
yeah.
halfway built building, yeah. um and he said it's really popular right now, and he said nobody wants to lose any home value, and so they're offering this in order to entice buyers.
Oh my god, just send the meteor.
Yeah.
Pretty much.
I am perfectly fine with my house losing at least 1/3 of its value. One half I'd be a little annoyed, but fine, right? Because I'm still living in it.
Yeah, I mean, as long as it's your home, you got a lot of wiggle room, right? Because
Yeah. One
yeah,
half is
but
where I start getting annoyed and upset. But like 1/3 would be like, yeah, I mean, it was never really actually worth what it is on paper right now anyway.
yeah, yeah. Half is rough. More than half, I don't know. Things are gonna get weird with properties over the next 20 years. Got a lot of boomers dying.
Yeah, there's actually a lot of interesting stuff. I like all the real curmudgeon-y sort of anybody on social media that's pushing a narrative backed by some amount of data that doesn't match the broad consensus. I'm always very interested in because I feel like in general it's just really weakly supported and usually wrong, at least to some degree.
Yeah.
And there's some really interesting folks who are talking about how there's not actually a housing shortage. There's
There's
a
not. Yeah.
house price issue, right? And
Yeah.
there's some interesting statistics like, and some of this is evolving as like that people have acknowledged that there were, for example, a lot of apartments being built in the pipeline that would expand access. But if you look at, apartment occupancy numbers, they've basically just been plummeting like this whole time.
Ooh, I have a
And
chart. You're gonna love this chart.
so then you have to ask like, well, why were rents going up so much if, apartment vacancies were going up at the same time?
Well, here
Um,
I got a
and
good
then
chart.
yeah, and that's another thing too, right? I mean, all of these older folks are holding on to all this real estate, and there's not enough people to buy it from them, right? And I guess likely what's going to happen over the next 10 to 15 years, I guess, maybe 20, I don't know. Everyone keeps holding on forever.
Jeffrey,
um,
check out the chart I just posted. It's
I'm going to look at it in just
unit
a
per
second.
capita.
But over that span of time, right? I mean, either those folks are going to have to try to sell and downsize, and there's nobody who can afford what they expect to sell it for, or they're going to pass it down to people who don't need it or also can't afford it, who are going to have to try to sell it. And you're just going to have all of these homes and no one to buy them because our population isn't growing. like we've actually hit like basically flat population growth for the first time like ever. And yeah, we're just gonna have so many effing houses. We're gonna be swimming in them.
Yeah, yeah. And I mean, that's gonna lead to things in more populous areas that we've only seen like really happen in like the Rust Belt and stuff, right? Where whole towns start to get
Yeah,
abandoned and
whole
stuff because
towns just gonna be, yeah. The Rust
um,
Belt's weird, man. Like going through like Pennsylvania and
I
shit
mean,
like that.
if
It's
you really want to like live
creepy.
somewhere, you can go to like Syracuse in New York, right, and buy like Main Street drag Victorians for like $2,000. You have to repair them. They're in terrible condition, right? But you can buy
Right.
them. Like
I love
the city will sell you a
Victorians.
house for like $500. Some of them are beautiful. I mean, they were like amazing architecture back in the day when there was money and wealth in those areas, but now they're just crime riddled shitholes. So
Yeah, they've been
it's
chopped apart into little apartments and they're falling
yeah.
apart. Yeah. I've seen some. They're like the way they chop them up is bizarre. There was one. It was like I don't even know how they got past fire code, but they basically had to go like up an escape ladder to get into like the little attic apartment they made.
I lived in a
So
brownstone in Brooklyn. Like right after college that was kind of like that. Like my apartment was up like a spiral staircase, and then I had like a trap door as my front door. And then like inside the apartment I had like a bed and like like a little like efficiency kitchen with like a tiny stove and like a little like mini refrigerator. I fucking hated that place. But it was
yeah,
cheap. It was really cheap. It definitely didn't meet any fire. Like I would have had to leap out of my window onto the fire escape 1 story below me. But I had an
yeah.
exit. I had an exit plan. But yeah, yeah. They New York City is the worst for that. They really fuck up a lot of beautiful old buildings that way.
Oh yeah. I think they have to just to survive, right? Nobody can
I mean,
afford the
they
whole
don't.
building.
They didn't have to. They could just charge more for the larger unit, but it's not as marketable, right?
Yeah.
Did you guys see this chart? I know I posted it earlier. But this is like the commercial
Did you
real
post it in the
estate.
chat or do I have to log into the
Oh, here
let me
I
get
can
on your YouTubes here real quick. I'm
uh,
messing with the sound.
I have it up on the
Did you see
screen.
my chart,
I
Jacobs?
posted
Yeah.
it in SPX earlier today, but it's
Oh, I
basically
think I saw it.
it's the green sheet for
Hey, look at
property
malls,
values.
man. Who would have thought?
Malls are fucking they're still flat, but it's that percentage performance is under zero. Um but yeah,
Yeah, are we? I'm
they're holding
assuming
up
malls
better.
are already like extremely low because
Malls
nobody
are
uses.
getting weird is what I've noticed is that like if you go to like a local mall that's not higher end, so like
Yeah, I've
um
got one.
yeah, like it's becoming like all like mom and pop businesses instead of like major retail chains.
Yeah.
And then
Yep.
like only like the fancy malls like South Coast Plaza in New York or in California or what's the one in LA? The big one in Hollywood. Like those are still all major brands, right? But they're all like it's like Gucci and Versace and like Tag Heuer stores and shit like that.
Your
But yeah, like
mainstays.
your mainstay malls are still just they've all become like mom and pop like thrift and discount stores. It's really
Yeah, it's gotten
strange.
real weird. And here in Texas, you get a lot of really weird, like religious themed ones. Oh, it's so bizarre. Like if you ever wanted like, a bunch of like really
Jesus
dusty,
candles.
just dust on everything. Everything's like floral and dusty and like peachy brownish and ugh, and put it in the store. Somebody thought that'd be a great idea. Hold on. My house is exploding with screams and
Oh, there's
see what's happening.
yeah, so there's absolutely there's a inherent risk in property values. Not only are all of these fucking MBS and CMBS holdings getting leveraged through Japan in order to lend that money at a better spread, right? But additionally, besides the spread in currencies, right? Um, Protecting real estate market values is of the utmost importance, and they can't really do that on CMBS, right? That's kind of foregone. But they're still trying to on homes. If home prices were to fall significantly at any point, that would open up a ton of banking risk. So yeah, I mean, it's definitely in the best interest of lenders to keep trying to maintain like a liquid lending environment at current home prices in order to keep home prices from falling. At every level, it's even if buyers or sellers are kicking back 10% of the cost of the home at closing, you know the they're still getting that home financed at the price they want, and the real estate agent's still making their 5% commission or whatever on the total sale price of the home.
Yeah, dude, it's super weird. Like,
So bizarre because they're like, I guess, marking it to market in reality, but not like
I think millennials
the
will have
opposite.
I think millennials in about 10 years will have the opportunity to own as many fucking homes as they want. None of the hedge funds want to buy this shit. They've been dumping their real estate holdings for the last 2 years. Like everyone talks about how like Blackstone and BlackRock and all of them are buying up all the housing inventory. They were in 2019, 2020. They're not anymore. They've been net sellers of their real estate holdings portfolios for a couple of years now.
yeah, there's a lot
Um,
of Blackstone homes for sale around me, that's for sure.
yeah, there's a lot of hedge fund homes for sale everywhere. They're not coming in with those in high demand areas. They're still a buyer, but that's very few parts of the country, right? That's just a fraction of the total real estate available across the U.S. Like you may never own a home in New York City or LA or San Francisco, but you can fucking own a home anywhere else. It probably
Dude, they're
won't be a
not going to hold the
problem.
homes in San Francisco. The property tax in San Francisco now makes the cap rate on those homes like you're literally guaranteed to lose money unless you make like 400 grand a year.
I mean, as long as they still have like techies there working for the Mag 7 and paying, 30% of their salary to rent a shitty
Well,
apartment and
how
live in
well how
squalor.
much how many of those people actually like so let's just think about that for a sec. How many people are actually employed at these giant tech companies versus how many living spaces exist in San Francisco?
No,
It's
I agree that the net market will dive, but there's still neighborhoods that are in like I have a friend who's like all he does is he has like his parents' homes in SF, and I think they're like on the what's that neighborhood called? Shit, I can't remember. It's like
is
on
it
the
the
west
one?
side of San Francisco, north of the center line. I forget the name of it.
Oh
Not
yeah.
not height. It's
You talk about the Tenderloin?
no, it's on the Tenderloin's east. Castro. Yeah, it might be Castro. I think it's like like from the ocean in, but above the park.
I think that is
Um,
the
I think that might be Castro. Yeah, I can't remember though. No, Castro's like downtown. God damn
Anyway,
it. Anyway, he has like 3 or 4 houses there. They're just packed like all the time. He rents out like studios for like 2,400 a month. And he has like 3 or 4 buildings, and it's all just like tech kids and like Chinese billionaire children who go to UCSF and like, but he's never had a problem finding renters. He still doesn't have any problem. He's a bad measure of like the whole city because the eastern part of the city's got a lot of fucking problems, but the western part of the city is still very high in demand.
well, so there's going to be this funny thing that happens where at some point all the people who still live in San Francisco are going to be like, "Why are there no grocery stores here?"
Yeah,
There's a
that's a
restaurant.
whole. Oh, it's called Outer Sunset. That's the name of it. Or no, Outer Richmond. It's Outer Richmond. Yeah, Outer Richmond.
I wish I could live somewhere where there was rich in the name.
Do you though?
No, I do not. I live in a place where the name of where I live is basically just says poor.
Yeah.
I mean, yeah, yeah.
Reno is just a contraction of renovate. I mean, come on.
Is that like really where the name came from?
No, I
No.
don't. I think this guy McCarran when he first showed up called it Reno, and then it just stuck.
That sounds even worse. Do you guys
It's
know that? Do you guys know what the original name of Atlanta was?
No.
Atlanta.
Yeah,
What was it?
Marthasville.
Ugh.
Exactly. That's why they renamed it.
That's a good
I mean,
reason.
Pennsylvania was named after a dude with the last name Penn. I mean, come on.
Let's say we weren't super creative
We weren't. I
with
mean,
the
yeah.
names. I mean, New York is literally just named after York. And before it
Yeah,
was
there's
New
one.
York, it was New Amsterdam. So it's like they didn't even they had a chance to rename it something cooler. No. They were like, ah, look at those Dutch with their New Amsterdam. And then they just renamed it New York.
Yeah.
I wonder how many cities will go bankrupt if there's a steep housing correction. Taxes will have to go up if assessed values go down. Are we in for a steep recession? 20 years. I mean, I kind of went on a rant about this over the weekend on the Discord a little bit, but the powers that be are doing nothing to prevent any of this. If anything, they're encouraging everything that's happening. And regardless of bullish or bearish or or how this looks in the near term, over the long run, very long run, this is terrible for our economy into the future. I think the only hope we have at this point is that all the other major economies fail harder and before us. If they don't,
Also,
we're
AI will
going to
save us.
get usurped. I don't think we're dependent on AI. I think we've obviously invested way too much money into it, but I mean, when we talk about equities and like equities being overvalued, they represent such a tiny fraction of the total, like the total amount of capital being invested globally, right? Um, Especially when you start getting into like bonds and derivatives and stuff like that, they just pale in comparison. Like the entire equities market is just a fraction of the bond market, right?
Well, yeah, like, and we talked about this on a prior stream where, the treasury market, right? That pretty much is directly tied to like, the global debt market, like people getting loans and using their credit cards and all that shit. That's all tied to treasuries.
Yeah.
So like that's how huge, like how massive that market is, right? It's the most liquid and just enormous market in the world. And so when you see reactions in the treasury market like we saw on Friday, right?
Oh, yeah.
That's
I
no,
kind of want to talk about that
Yeah,
yeah.
let's do it. That was
because
fun.
so I said earlier in the week that I thought with the QRA and with the Fed decision that MMFs needed to rebalance for a couple days, and manage the shift in supply and short dated bills. And then Friday, we get this massive rally in yields. Maybe our largest rally in yields in like a couple months. Um, from them bottoming out like after QRA and the Fed decision, which obviously was counterintuitive, right? The Fed says higher for longer, and Yellen issues less bills, and then treasuries start rocketing. So that didn't make a lot of sense. But Friday I felt like it was more on track. Um, But then the equity response with,
Yeah,
dollar and yields rocketing, that was something else.
yeah. I don't. I mean, I think part of it is, I mean, that really hot jobs print sort of solidified a little bit that, hey, the economy is growing at a very hot rate, right? I mean, a lot of people were surprised at that GDP print of 3.3 or whatever it was, which is a nominal of, you know, five and a half or so. I don't remember exactly what the number was, but a lot of people were surprised at how high it was. I was actually surprised at how low it was. I was expecting it to be over 6% nominal. Um, but sure enough, this quarter GDP now is projecting well over 6% nominal. I think at some point you have to acknowledge if the government if the government's debt is at or roughly above the size of the debt is above or at the size of our GDP, and it's growing at 7% a year. GDP is probably also nominal GDP is probably also going to grow at about 7% a year. That's
Yeah.
just kind of we're spending 7% of our GDP every year in growth, right? The debt is growing at that rate. And so, yeah, it's got to go somewhere, and it's all getting pumped into our economy, and it's making it hot. And it. I mean, if you're somebody who has to hold a bunch of bonds, you're certainly not going to want to. You're certainly not going to want to hold, a 5-year bond at under 5% if we're going to grow.
Yeah.
For the foreseeable future, it's 7, right? That's stupid.
I mean,
So
frequently in the past, periods of like NGDP in excess of like 5% or 3% have, for like a long run period, have overheated really quickly and led to like spikes in inflation. So, my real question is, how long can we run at a rate of growth, 6% in excess of the Fed's baseline of like non-inflationary growth, which I think is 1.8%. Like how many quarters can we run above that without it seriously impacting inflation? I mean, they can do what they want and change CPI however they want, but like the inflation's there, right?
well, I mean, they're currently trying to do everything they can to prevent inflation, right?
Well, I
And
think they're doing
everybody's
everything they can to
fighting that.
prevent reporting inflation.
Well, sure. I mean, there's some of that. I don't know if they're trying to prevent reporting it, but I think they're enjoying the large uncertainties that are currently swinging in their favor. Um, but I think the bigger issue is that the bond market is just simply resisting the reality of the current macro climate because they must, right? I mean, there's too much duration risk that already exists. They can't. The market cannot support what the rates naturally want to be because because it would big people would start to blow up. And
Yeah, yeah.
so this is why I think it's silly to say that we've achieved a soft landing when you have this big we're still so far away from equilibrium. It's hard to say that we've landed until that equilibrium can be met, and then nothing blows
I've got a
up.
cool chart for you, by the way.
Oh, I love charts. So yeah, I mean, I'm not a fan of long-term duration at this point, under like definitely under 5, but even maybe under 6. I mean, if we're spending the way we're spending.
I should add that
Um,
2007 is like over here somewhere. Well, hold on. Uh, how do I highlight that? God damn it.
are you still on this chart, the forever blowing bubbles?
Yeah.
Is the idea that we're just swirling around the edges here?
Kind of. It's like, so yields. It's yield to Nasdaq patterns over various years and their distribution. I thought it was kind of interesting though, because now they left this one out. Like, they point out a bunch of specific dates that are outliers, but hold on, I'm trying to get this to where I can nope, write on it. Okay, I think I can write on it now. Okay. So somewhere over here is 2007, which is conveniently left out of the ones they highlight. But 2007 also very similar to 2009, right? I'm not sure which one of these points it is, but it's somewhere in that region. But 2007 also saw a period of like yields up, Nasdaq up. I think also prior to the COVID crash, we saw that as well, and that seems to be like 2019 seems to be missing from this as also. So they're trying to, I think they're trying to say that like yields up, Nasdaq up is bullish, like a recovery.
Oh, really?
Yeah, like, well, I think that's what they're trying to point out with this chart because of the dates they've chosen to highlight. These are like a lot of these are at least in the yields up, Nasdaq up section, or like bubble, like bubble or
Well,
crash
sure.
recovery periods, like 2013, 2009,
Oh, I would say that they were bubbles.
Yeah.
Well, so here's
1999 is pre-bubble. We saw a lot of yield up, Nasdaq up, but we also saw it in 2020. We saw it in 2007.
Where is 20? I'm looking for 2020 on this
2020
chart.
isn't on the chart. I kind of circled the area. So I kind of circled the area where 2020 is pretty close to where 2023 is, right there on kind of that flat line or just above it. 2007 is also that outlier. It's one of those outliers to the top right. But yeah, I mean, I thought it was an interesting comparison, at least.
Okay, so here's how I would interpret this chart, and you can maybe tell me if I'm wrong, but I'm gonna need you to do some drawing on this, so you'll probably like it. Okay. Draw a line from the yellow through the origin down into the blue, just a straight line.
Oh,
nice big thick one.
Let me see if I can. Boop.
Yeah. That's kind of what I would expect would be the natural relationship, right? Because as you know, obviously things have been distorted in the era of bubbles because, you know, with phrases like Tina, there is no alternative to stocks because, you know, they've just basically destroyed the yield of anything. But in general, right, when you're investing, you're always choosing something relative to something else. And you would expect as the yields on bonds go up, the yields on other things would go down, right? I mean, generally, right? I mean, you could have a point where you have explosive growth and also high yields on bonds, but I would say all things being equal, as one investment tool becomes more attractive to another one, there should be this negative correlation. They shouldn't all, everything can't all go up together, right?
See, I feel like that correlation's being realized, and like,
well, that's where I'm about to go.
Okay.
On this chart here, which you've taken down. How dare you?
Sorry. Where? Oops. There it is.
What is okay? Here we go. Yeah. So like for example, when I look at this, I say, okay, well, you kind of circled. You said 2007 was kind of around like 2023ish or whatever.
It's a little above it, but yeah, 2007 was marked by yields up.
Anyway,
Nasdaq
like
up.
far away from this sort of negative straight line that you had drawn earlier. And then what happens is it tries to snap back to that line and overshoots, and then you get 2008, which is way under.
Yeah.
Right. And that kind of similar thing happens 1999, way snaps down way below to 2000, way under. Probably.
Okay. Yeah.
Well, I guess we haven't really finished this cycle here. I guess what did COVID do? Everything from like 2019 to now has been kind of a resistance of this, seemingly a resistance of this effect, right? Where you try to push everything up, but eventually at some point you have to return to equilibrium. But if you come crashing towards equilibrium, you're going to shoot. So yeah, seeing us way up there in 2024, not super exciting. Yeah, I don't like that at all.
So yeah, I could kind of go into that a little bit more too. Hold on, I'm trying to figure out what the fuck's happening to my Epic pen. It stopped working again.
I'll be right back.
Oh yeah, you're doing some weird flashy flashes. Mr. Poopy Pants is the 60/40 port. I don't know. I mean, in general, it's supposed to be a hedge, right? And that's kind of that negative line that I was talking about. If you think that generally they should move opposite to each other because they're relative investments, yeah, anybody who saw both go down probably got blown up a little bit, sure. But I think now, I mean, we're right back into both of them going up again. And I know I get a lot of pushback on this on Twitter, which makes me think I'm crazy. But I really do believe that part of the reason that they're in sync is because they are rigidly connected by leverage right now. And it's the unwinding of that leverage that's keeping it out of equilibrium that causes it to violently react.
Makes sense. Okay. Epic pen's just not gonna work anymore. God, that's annoying. Alright, yeah, so I mean I wanted to show you this. So this is current current quarterly EPS.
Yeah. Well, is this before the meme 7? Because they bumped
No,
it back positive.
this
right?
is Friday night.
No.
Yeah,
No.
this is
Hold
Friday.
on. I'm gonna pull it up.
Okay.
Maybe they didn't update this plot
Okay.
because February 2nd, 46% of companies have reported the for quarter 4 2020. Wait, are we looking at the same thing? This is quarter 1 24, quarter 4 23, quarterly EPS, first month. Oh, this is for the first month of quarter. So I guess they're trying to compare like relative performance of the first month to other ones. So you could argue that perhaps quarter 1 of 24 is performing slightly better. But why did they do? I mean, we're still doing quarter 4. I'm very confused. I don't like this chart at all because I don't know what it's saying. But anyway, quarter 4 earnings are now up 1.6%, whereas before the meme 7 announced earnings, it was the negative 1.4, I think.
Okay, so maybe this one's not updated.
I don't know what it's saying. Yeah, I think
Yeah,
what it's trying to say.
it's saying that the quarterly EPS for S&P is at negative 1.4 for
Yeah,
quarter one
that was true for the
2024.
that was true for the first month.
Okay.
But this is all quarter four earnings that are coming out. So why they're public? So yeah, I'm not sure what this number is saying. But yeah, I mean, earnings are finally. Yeah, I found this chart. I don't know what they're saying, but earnings are finally a little positive. But remember, at the beginning of this year, everybody was expecting, what was it, 12% earnings
Yeah.
growth for this quarter. So we keep pushing it out, and we keep just ignoring the fact that it's not happening because it's just right on the cusp. We're just off a little bit, right? So at some point, either we're gonna get through it, and we're just gonna just put our fingers in our ears and make it to the other side, or we're gonna fall through the floor.
Hmm.
It's just like options. You roll your predictions out and up, right?
Yeah.
What they're doing. I mean, and this is so this is the market climbing up the wall of worry, right? And this is really what the equity markets are best at. They're best at pricing
There's
in
your wall of worry.
what you got up, let me see. Yeah, okay. So this is a great sort of, I guess, teachable moment on the efficient market, right? The market is most efficient at pricing in optimism. I'd say
Yeah.
that is a very efficient market. The market is extremely efficient at that. The market is very inefficient when it comes to pricing in risk, right? And it's always been that way, except for in bear markets.
Yeah. I mean, it's always been that way for most of our adult life, right?
Well, no, in bear markets, right? That's when the efficiency in pricing and risk increases, and that's when you see like a hot inflation print, bring down the index by like 80 basis points in pre-market. That's pretty efficient. But when we see hot prints now, we're being very inefficient about pricing in the tail risk of that, right? Like we saw the employment report come out just like absolutely gangbusters, and rather than price in the risk that the bond market very clearly priced in, the equity market instead went, hold my fucking beer. So yeah, it's we're witnessing the efficient market play out to the optimist side because we spent an entire year in a bear market. Everybody was fucking tired of it, and everybody thinks that after a year we should be in some form of a recovery, and now it's time for us to formulate the narrative in which this recovery will
Yeah.
certainly happen.
Well, just to be clear, the efficient market hypothesis is complete horseshit.
I think there's a caveat to it that makes it more valid, but yes, on the whole, the efficient market hypothesis is completely defunct, and no one should ever believe it. It's the worst. It's the worst notion to give investors that there ever was. Because if the markets were efficient, there'd be no such thing as you should just buy a SPY and shut the fuck up.
Yeah, I mean, I would buy like an efficient leverage hypothesis.
Yeah, that makes total sense.
Leverage is very efficient. Uh, Positioning is very efficient, but
Well, to say that
positioning is not linked to.
everything is not priced in, the consensus is priced in.
Yeah.
Yeah, yeah.
That's the easiest way to put it. And
The
right now,
consensus is levered in.
it is well. The consensus is very efficiently priced, and we're just seeing that, right? It's like there is an efficient market that exists, but the
I mean,
efficiency
you
isn't
also
priced.
also
It's
with Friday though, it's hard to say that like all of that was just everybody just piling in. I mean, some of that too was the effect of Facebook and others blowing out sold calls to some
Well, yeah.
extent.
So JFresh, think about it this way: you're a fund manager, and you're underweight at the beginning of 2023 because, like us, you have a fucking brain, right? But stocks just start rocketing, okay? and they just keep on rocketing. And you're sitting here with a bunch of investor money in the coffers, just sitting in money market funds. And you're like, holy shit, my beta is going to zero. My alpha is dying. I need to show my investors some returns relative to the market. Otherwise, they're going to get really pissed at me. But I don't want to buy shares. I don't have the liquidity to buy shares. So what I'm going to do instead is just fucking synthetic long the market and return my alpha as close to 1 as I can.
Yeah. I mean, that's what I've had to do largely over the last, I mean, I don't have a portfolio comparable to a fund, but you know, I went into 2022 long or 2023 long. And then by March I was net short. And then in order to make it back, to make back losses on the net short, I had to go synth long, like, and heavy. I had to go pretty long through like June and July, and then December, I had to go synth long again, just to pad out those losses for the year. So yeah, I mean, you're not incorrect. Obviously at a much greater scale than anything I would do myself, but
Yeah,
that was really the only way to make it back, right? Because you're so late to the table. And we even saw that in the November squeeze, right? Like if you look at the options data, and me and JFresh have a lot, I think you have too. There wasn't anybody fucking long that thing until like December 14th, right?
Yeah.
Like everything from like end of October through December was just short squeezing. There was no bulls anywhere. And you know, when the bulls did finally come in, you know, they were already in a situation where liquidity to the upside was slim, right? And so what you've seen since then is just constant leveraging up in order to pad that loss in alpha, right?
Yeah, it's a crash upwards. That's all it is. It's a panic. It's just long panic, you know. And it's
kind of like exactly what happened to me Friday, right? Like I went short the rejection at like 49.20, and then like I got burned on all my puts, and so I just bought a shitload of out of the money debit spreads, like 6-1 over my losses, and then just waited for it to keep going up, right? And then I made all my money back, but I had to like leverage the upside twice as hard to get it.
Yeah, well, this is like so this to go back to Jay Fresh's analogy about boomers and tech. This is like all the fund managers saying, "Man, this shit's bearish. I'm just gonna synth long it and stay underweight so I could protect my alpha." But you know, stocks are gonna
hedge becomes the position.
And then they look at it 6 months later and they're like, "Why are stocks at all-time highs?"
Yeah.
It's so dumb.
Yeah, the hedge becomes the position, and then you've got other bears that are, you know, long the underlying covered calls to get yields. They're all getting blown out again.
Yep.
Jay Fresh, did you see? I popped open an options income ETF, and I showed Gherk. Its dividend yield was like 20%.
Oh yeah, it looks great until it's just like worthless.
Yeah, until the whole fund blows up. That's the problem with this, right? Is like prices keep going up, but so does leverage. When you run into that situation, leverage is just going to keep rocketing, and you start to get to the point where like you need a less and less impactful catalyst, right? Because risk is so pronounced. And I already think we're kind of beyond that point. I'm really surprised we recovered from the bank shit that happened on Thursday, honestly. But
no one even cares anymore.
Yeah, it was just,
that's another aspect
small
of it
enough
too,
that like the leverage can outweigh it. But I mean, if we get a haircut, any haircut. Any haircut, any collapse in the spreads, in currency spreads, any yields, you know, moving above 5%, anything that's going to trim margin at this point is going to be damaging. And like we're watching margin get trimmed in real time as yields rise, right? But equities are rising twice as fast. So
yeah, that's kind of what I was thinking on Friday. I'm like, man, the people who are levered right now watching these yields rise are probably really glad that equities are going up faster. So like their margin is shrinking faster than their margin requirements are growing. I'm like, man, if this thing turns around even a little.
Yeah. No, I'm
So it's
honestly
we're
shocked.
literally like, what was that Jason Statham movie where like if he stopped running or whatever, his heart
Crank.
Oh,
stopped
Crank. I think it's Crank.
or something like that.
His
I
like
just watched it where
his
he had
heart
to,
will
like,
stop.
yeah, he had to
Yeah.
like bang his girlfriend like in like the middle of a crowd to keep his heart going, and basically became a registered sex offender.
I never saw it. I just saw the premise. And
You
I'm
should. It's
never
the
I'm
dumbest
never
shit
gonna see
ever. You
this.
should watch it. It'll make you
But
laugh.
maybe I should watch it because that's pretty much what our market is doing right now. It's like if this thing turns around, our heart will stop.
Like I'm
Here's
honestly like I'm shocked that the DTCC or the OCC, I guess, hasn't come out and put haircuts on short options on the zero DTE side. Like on Friday, we had a fucking so VIX went above 14, and then the market dropped. What was it, like 30 basis points, 35 basis points, like in the span of like 3 minutes? Like that was insane. That sell off was mind blowing. How fucking hard and fast it came in. And like that was definitely some uh like short vol zero DT shorting fund balancing their NAV or something that just instantly set off like some weird cascade that you got stopped in its tracks. But how many times can you do that, you know?
Well, but yeah, and this is also another issue just from mechanics that I know we've been talking about off and on for a few weeks. Is that at some point you sell so much vol it generates more vol than it crushes.
yeah.
Yeah, you blow out the
But we're
spread to the other
starting to
side.
see
Yeah.
that with the spot up, vol up, right?
Yeah.
And we're seeing it like day after day after day, and it's not a little bit of vol up like we were seeing on the call squeezes. It's like a lot of vol to the upside.
Yeah. Well, it was notable. I mean, on Friday, I haven't looked, checked any specific strikes or anything, but I imagine based on how the VIX behaved on Friday, that vol went up on Friday. Um, I would say substantially.
And that's that
Again, I
fixed
haven't
strike
verified,
vol that Chem loves talking about so
but I
much.
don't know. I'm not. Yeah, I don't like that, especially when the market's moving so much. But I just mean if you look at the tails, I'm sure the tails on fixed moneyness probably went up on the IV curve, and that because if you think about the weekend effect, you're losing 2 days out of 30. That's something like 2 to 3.5% that you would expect everything else being equal that VIX would drop, and it did not drop that much, and in some cases up right during the day. So
I still
there's
went
there's a lot of pressure on vol.
I still went long vol at the end of the day Friday. I hope
Yeah.
I get 9 out of 9 weeks.
you
Where
might
I
you might
make
hit
money
a
on VIX
you
futures.
might hit a great one this week. Because
Yeah,
I
I'm
mean, here's
hoping.
another thing. I do track some aspects of the volatility of vol.
Yeah.
So, kind of looking at the IV smile of VIX options,
Hmm.
and those have been very slowly and very sporadically been very slowly on an up grind since, yeah, pretty much since like right after like vol got destroyed at the beginning of November. It's been very slowly, steadily climbing up, pretty much in a straight line this whole time. It's just this very slow build.
Yeah, so that's actually something that me and Dork, I'm sure you already know this, but me and Dork are always looking at that like that correlation between cash VIX and the VIX contract in front.
Yeah.
This week was the first week where it opened higher than it closed. Or lower. It closed lower than its high where it opened. Sorry. I had that backwards. Yeah, it opened this week at like negative 54%. And this is the first week we've seen the week close out at a lower level. All the other weeks, the week closed higher. over the last since November 13th when this first flipped negative. And I mean, I guess it didn't really become statistically relevant until like 2 weeks ago, 3 weeks ago. But it's at negative 54%. That's pretty. That's pretty important, right? I mean,
Yeah.
like if we go
I mean,
back in
and there's
time, it's never hit this level of relevancy. Even in like the flash crash of 2010, I think it only hit negative 29%.
yeah, and that's not to say like, obviously anything can happen that, could crush Bull. Like, people had the impression that there was some sort of ceasefire that was going to happen in the middle, and that
Yeah,
seemed to have some fall damping effect. But if you look at, I had to do some digging. Okay, there was a proposal of a ceasefire sent over, and they said we will look at it, and then they
yeah,
looked
which
at it and
caused
said, this is
oil prices to
garbage.
drop. Oil prices dropped like 5% on that news.
Yeah, and then they looked at it, and like a day later, like this is garbage. We'll never take it.
I wish I was long oil at market open because I feel like that's gonna move pretty hard. Here's
Yeah,
something I know you love, JFresh. You're gonna love this chart, because it supports you and Brick and Brottle's kind of idea that the
yeah.
Fed Fed is
I
the
need to
Fed is doing
retweet some
nothing.
stuff of him because he's not getting enough love, and he's starting to get grumpy.
Yeah, yeah.
And
I was talking to him a bit in DMs, and he's not really very interested in FX markets. But I was kind of like wondering his take on what I was writing about with Japan. Um, but I'd love to get him on here one time. He's got a very interesting take on Fed and Fed policy. Um,
yeah, the
it's a
guy
little
is
extreme, but it's
he's
very
the
interesting.
perfect amount of nuts. He's like my kind of nuts. I love it. I love it.
But here you
Um,
go. 89% of U.S. consumer debt is fixed rate. So if you think about this in relation to Fed policy, it means that Fed policy is only having an effect on 11% of U.S. consumer debt. Now, obviously, it has a lot more effect on corporate debt, but on the consumer side of things, almost no effect at all. So as far as your average American consumer is concerned, Fed policy has little to no effect, and doesn't prevent. It's not really in a position where it prevents the consumer from driving inflation.
yeah, it has affected me none,
Yeah,
right?
yeah,
All my debt's fixed rate, and it was all fixed in 2020.
yeah.
And then all this stuff started happening. So guess what? I stopped screwing with my debt and let it sit because there is no single material on earth more valuable, whether God made or man made, than the 2.8% 30-year mortgage. It's the most valuable thing on this planet right now.
I don't
And
know.
nobody's gonna give it up.
I have 5-year leaps on TLT.
Oh, okay. Well, let me run the numbers.
I'm just fucking with you. Yeah, so I thought that was kind of interesting. But the corporate debt is going to be probably a big deal. It's probably one of the reasons we're not seeing yields ease, right? I mean, we've got all this maturity coming up in quarter two. We have a pretty decent amount in quarter three and quarter four. And the Fed has basically said we're not backing off rates by March, right? And then that pushes out the next possible rate increase or rate decrease until May, which is going to be after a lot of this corporate debt is, and this is their shot, right? All that debt maturing this year and getting refinanced at higher rates. This is their real shot to like tighten financial conditions in any meaningful way. So I think the Fed cutting rates is probably off the table for at least the first half of this year.
Yeah,
Um,
I still think they're not going to cut this year. know that
I
that's
kind of
bold.
agree. I think maybe we could go to like 525 to appease
Yeah, okay, yeah.
politicians or
But
something, but
nothing I've seen this year since I said that at the end of December has really changed my mind on.
I mean, they
I think
can't they can't
I think everything's gonna just
they
blow and
can't
go hot.
complete both mandates simultaneously when employment's running as hot as it is, right? So it's really just it's always going to be you either have maximum or maximum
Beyond
employment,
maximum
yeah,
employment.
beyond maximum employment, or you have price stability, not you have both, right? And 3.7% unemployment is not conducive to price stability. So I mean, I don't see a world where the Fed completely abandons their mission. Um, I mean, I don't, right? I mean, like beyond like the fact that their mission has no real effect on anything.
Well, this goes back to like
They just
Bicker and
have to keep
Brattle's
shit.
points about
Yeah,
what does the Fed do? I mean, their primary tool has always been uh, their ability to convince people of a different reality that actually exists. Right? All they have
yeah.
to do is convince people that credit will be tight to get people to tighten credit. Once they lose that ability to persuade people to believe in a statement that simply isn't true, what do they have left other than to,
I mean, they can start marking to market
actually
securities and actually they have the ability to actually tighten credit, right? They just haven't exercised that ability because everything the Fed is taking off their balance sheet is just rolling off anyway, right? So they're just simply not adding to their balance sheet, and
yeah, yeah.
that's their quantitative tightening effect. But I mean, realistically, they still have the option on the table to mark to market, right? And if they mark to
Right,
market,
but
they're gonna
what I'm getting at is this whole idea that the Fed can uh, even has the ability to control the market with the finesse to achieve a soft landing, right?
oh yeah, not at
Um,
all.
the only way that they can actually type, because, and this goes back to like, irrational exuberance and the markets, Dork talking about the market being really good at optimism. Um, People are going to be optimistic and over leverage until they can't, right? And so if the Fed isn't going to make something blow up, can they really ever dampen the effect of the economy? I think that their only tool to control the economy really is to. So if they're not willing to blame, they're not doing anything.
Yeah, it's I agree that they're the tools they have are blunt. Um and currently I don't think the Fed's had any effect. I think if we get a reignition of inflation, we're going to see that starkly, right? Like it's going to become very apparent to everybody that holy shit, it's been 2 years. Fed policy hasn't done a goddamn thing. And like I don't see that as an impetus to change Fed policy, right? I just think it's just gonna be a very like rapid realization that we've accomplished literally nothing. Inflation is just as sensitive as it was, and it can reignite just as fast, right? And
I
then
mean, I still think the primary thing we've accomplished is we shorted oil to shit, right? And that's
yeah,
done more than anything the Fed's done.
yeah, honestly, yeah, selling down the strategic reserve has kept oil prices from surging, but now we're refilling it, right? We're refilling it, and we have hostilities mounting in the Middle East.
But you also now have all of these massive short positions on oil who are predicting a who are rightly seeing this worldwide recession start to form,
Yeah,
who are now so we're and so you're starting to see these, it's almost a multi-weekly occurrence now where you see like 3 to 5% moves on oil as like the battle rages over.
it's crazy, and like I think it was last week a hedge fund blew up short oil, a decent sized one. I forget the name, it begins with an A or something. But yeah, one hedge fund blew up short oil. Um, and you know, now with the and like the reaction to a potential ceasefire being oil down 5% is obviously not natural
Yeah.
movement. But on the backdrop of this, we also have the fact that, you know, oil's just not a US only commodity nowadays, right? And we have other economies that can facilitate a lot of demand on oil. And I don't think oil is going to necessarily react the way it has historically. So you have all these shorts playing this like recession seasonality game on oil, right? Assuming that we're going to enter a recession and oil prices are going to droop. But as we're entering that recession, China is pulling out of theirs, and their demand for oil is quite high, right?
Huge. Yeah.
And I think that can create a bit of polarity there that hasn't existed in prior U.S. recessions. Right? If we look back at China's economy in 2008, it was a joke compared to where it is now. And I mean, where it is now is very similar to where it was in 2008. But I mean, their potential for creating demand and growth and commodities demand, I think will have a really interesting effect on how commodities broadly and energy specific behave moving into a U.S. recession this year, because China's clawing their way out of a financial crisis right now, and if they start to get some growth under their belt, their demand is going to skyrocket on commodities while the U.S.'s demand is waning. And I think that could be really interesting, kind of novel as far as prior recessions have gone, right? Because it's always been us creating that demand, or Europe, right? And then, you know, our economy, Europe and America's economies are pretty inherently tied together, but China's is not. And
Yeah.
that's kind
A
of
lot
that's
of.
kind of an interesting outlier. But oil
I,
oil interestingly drives a lot of demand for volatility in equities. So there's a feedback between the oil price, the dollar, yields, and volatility. And gold also in there to some degree as currency risk um increases. So you know, both oil and gold are like tertiary drivers of equity volatility.
yeah, it's going to be interesting. I don't know. I tend to disagree with the Fed to say that risks to the upside and downside have come into better balance, and now they're worried about going down. I think the risk is still all on the upside.
Yeah,
Uh, I think that we're right on the cusp of a re-inflation on the back of
I think we're
deficit
already
spending.
seeing it, right? Didn't so besides CPI in December being up and PPI being
Yeah,
up,
I'm talking
right?
about it up enough that it's impossible to ignore, right? I mean,
Yeah,
until we've got like 2 or 3 months of,
but we saw the
over.
first turnaround in core PCE in like 6 months, which I mean I think got glossed over, but that PCE report wasn't good. Like the year over year was down, right? But the month over month turned back around. Um,
Yeah,
we still have that
and again, we
shipping
need to
issue.
see more data, right? It's
Yeah, yeah.
still enough. 1 month, unfortunately, everybody's like waiting for that print, and then they all react to it. But 1 month is simply not enough to.
I don't think 3 months is really enough
three
to
months is
react to.
pushing it. Yeah, I mean
Yeah.
that's why I prefer to look at PCE because it's just looking at aggregate spending and not trying to suss out as much as CPI does. So it's a little bit of a cleaner number. Um, and I like to look at only Europe, really super meaningful. But I think it will start to become apparent, and within a window of 3 months of a change is enough for people to start talking about it and to start to in a little bit, even if
Yeah.
it's not super statistically relevant yet. Um, because people are, I mean, especially now that people are saying the 3 month and the 6 month year over year, this version of inflation is already under 2%. We're already at target.
how do we
we're already
feel
done.
about the correlations between the Fed narrative shift, the change in QRA, and the market reaction being very, very similar to the knee-jerk reaction that we saw in July? Because I did want to bring that up. In July, if we go back, hold on one second, I'll try to show you guys. This is the week that we had the Fed decision, the BOJ changed
Mhm.
YCC policy, and
QRA.
QRA came out. Yeah, and that was all right within this window. This was the BOJ decision, the big drop, and then
Yep.
we got QRA and we got Fed, and then but the market reversed very sharply, held the levels till all the data was out, and then slumped. Right. I'm not entirely sure that the pump we saw last week has a lot of legs.
Oh
Um,
fuck no.
and even into the end of the day, right? Like we lost like 30 bips of that upside move going into the end of the day Friday. And I'm not sure that that's not just leading, especially with yields doing what they're doing, right? Like the bond market
Yeah.
is telling us the market is going to go down. And the equities market is like just stop. And that's I mean it may not be realized this week, but I think that's something that we should be paying attention to, because that's been a warning sign a couple times in the past, and I think it'd be foolish to ignore it.
Yeah, I
Hey,
mean, I
Jaybird.
still, hold on one dork. I'll just
Yeah,
say,
yeah, yeah.
I've said most of this year, violent chop chill down. I still think that that's kind of the environment we're in, given the leverage. I said, I could see momentum driving us to to 5,000. I've modified that a little bit based on the momentum of the past 2 months, maybe 5,100.
I could see
But yeah,
that.
I just see we're running on fumes, and it feels like it's going to go on forever, but obviously it's not. And I don't know when it's going to run out. But
I mean, all of the
yields
things that
going up, it can only be bad.
yeah, I mean, all of the things that tightened our financial conditions back in July, right, are present again. So, we've got Dixie moving up, we've got yields moving up, both sharply. We've got correlation breaking down. We've got the carry trade getting leaned into super fucking hard on Friday and Thursday. um, and obviously, we all know the effects of that on broader financial conditions. Bond volatility started to pick up and then it dropped off. I'm really not sure where that's gonna go, but skews now at like 160, so it's still very elevated. It's I mean, I agree that the momentum could carry us a little higher, but I think we're probably gonna get a correction out of this in the next couple of weeks. Either probably after OPEX, given all of the buying, right? I'm not sure the pump from 4,200 has legs. Well, I mean, it
First
was
of
still a
all,
short squeeze at that point.
it was from 4,100.
Yeah.
But yeah, um, it's and I've said this a couple of times throughout I guess, more than a year since we've been doing this now. Jesus. There's like periods of probabilities where there's indications from various places that say, okay, this is getting to be extreme, but it could still go higher. And then there's those points where you get to like, okay, we're pretty much tapping everything out. We're starting to get to one of those points where like we're pushing everything we've got. um, and the probability of going starting to pretty meaningfully skewed direction.
Yeah, Gamma Max is flattening out on the. That's something I like to look at, these tops here. is that Gamma Max is kind of flattening out on the SPX monthly, and so I still think that there's a chance that we test it. So I kind of agree with you on that like 5100 range, but I think it's gonna pull in closer, right? If we start going up more meaningfully, like maybe it'll pull in towards like the JPM collar, and that's kind of where we end up. I know they love to target those collars because they give all that upside liquidity. Give me 1 second.
Yeah.
Someone's at my door.
There's also, I'll also just say before he gets back that, I mean, right now, I mean, pretty much since the middle of January, the options market has really struggled to price in rates, which is also quite interesting because rates will determine rates do have an impact on very large portfolios that are hedging, because the pricing of options does factor in rates, generally longer term. Although I do think it is not an accident that the Fed funds futures were pricing, and I guess still are pricing in a ridiculous number of cuts this year. And for a while, earlier in saying things like there was a significant probability of a cut in March. I don't think anybody believed there was a cut in March. The options market, even just out into March, is having trouble pricing rates. And so people are leaning on these instruments to hedge for these silly outcomes that might not happen. Obviously, it's one piece of a much more complex dynamic, but I do think it's notable that the options market is having trouble pricing it.
Yeah. Hey, JFresh, check out the chart I just posted in the chat and tell me what you think of it.
Look at those colors. HV30 of what?
This is VIX.
The HV30 of VIX?
Yeah.
That seems just wrong. Something's wrong.
I know, right? Yeah. I thought so too, but like the formula didn't change like at the end there when it started going up.
Yeah, but VIX, yeah, maybe. I don't know. Which axis is which?
So the right axis is just VIX price, and the left axis is the volatilities.
Oh, okay. Yeah, I mean, I could kind of see that.
It's weird that it just like flatlined like that, but I guess not really.
No, it's weird. It's probably wrong because especially out here, it's huge, right?
Yeah.
There's something wrong with your calculation.
I don't know, man. Well, why did it just suddenly become correct? Unless it didn't.
Unless it didn't.
All right, we'll have to discuss that a bit because if that's the case, then I got some work to do.
Yeah, we'll figure it out.
Yeah, I thought it was interesting, but yeah, it could just be an artifact of my stupidity.
I'm back. All right.
We were just talking about Dork's stupidity.
Oh.
Yeah, it knows no bounds.
So who won last week? Bullish Girk?
I think so.
He was the most bullish. I really, really fucking hate that guy.
I was expecting the pump to happen after Microsoft. It didn't happen after Facebook, so I was.
Bearish Girk was doing okay for a minute. As was Dork, I believe.
That was all right, but
I think you were pretty spot on the first half of the week. JFresh was good until he had his weird, like he bet on the upside after I think FOMC, and we both bet on the downside.
Yeah, the upside was Microsoft earnings, and then FOMC was when it just started going straight down.
Yeah, those earnings were not spectacular. Microsoft, Google, that was not very impressive. I really don't think Amazon and Meta were either. I mean, but the market disagrees. at least for
I
now.
must say, my pink line was a really, really good resistance.
Yeah, you kind of nailed it
She
there.
said.
But yeah, bullish Girk wins for the second week in a row. So he's going to be the one to beat if any of us want to have bearish success.
Well, you're gonna hate my prediction this week.
Probably. Is it flat? Because that's the prediction I hate
No,
the most.
it's definitely not flat.
Okay. Is it just straight up to 5100 from spot?
Maybe.
Jesus Christ. All right, let's do it. Who wants to go first?
You want to go, Jay Fresh? You have a good prediction, and sounds like all lined up.
Yeah, I can go. Let's see. Okay. Up to 50-50 on Wednesday afternoon.
Jesus. All right. Hold on. Open where we closed.
Yeah,
Okay.
sure.
All right. Wednesday afternoon, 50-50.
Like in the midday. Let's
All
go.
right.
4,800 in a week.
4,800 end of week?
Yeah.
Wow. Yeah, okay. That couldn't possibly be any more polarized. I like it. Now all right. I feel like somehow he's playing the same game again, but I'm not sure. Okay, Dork.
Okay. So from spot, 4,800 by Wednesday.
Okay. And
This
then
is going to be a ridiculous.
And then 50-50 end of week.
oh, fuck you guys.
Uh,
You guys stop taking this seriously completely. This
I
is
mean, we'll get
untenable.
there's barely any data this week. There's a shit ton of S&P earnings. Like I think 20% of the companies have earnings this week. So like, it's gonna be
Also,
one or the
like,
other.
what, $400 billion in duration or whatever?
Yeah, there's
No,
also
13.
that.
So 80 billion at 13 weeks, 70 billion on 26, 80 billion on 42. So they're just like recycling real low duration, 130 billion. But then the 3-year, 54 billion, 10-year, 42 billion, and 30-year, 25 billion.
Hmm.
That's all bullish, Jay Fresh. It's all bullish.
Wait, they're selling the 20 and the 30 this week?
The 30 and the 10.
30 and the 10? How much on the
And the
30?
10 years, 42 billion. The
That's a
30
big
is
one.
25 billion,
That's not very big.
but it's 30 years.
It's true.
Dude, it is dumping snow in my fucking house right now. It's crazy.
All right. I think
You see how Kirk just
Monday.
drew like a trend line through
I'll
the
try to.
intersection?
Okay, I'll do bullish Girk first. I think Monday we retest 75. Then reject back to 50 by Tuesday close. Then lower into the midweek around 49.25. What's that? Thursday. 5,000, I guess. Or, yeah, like that. All right, that's bullish Gherk. Bearish Gherk would be we open at like 49.40. Drop to 4,900 by end of day Monday. All right.
How dare you?
Get them all colored up properly. So I'll take a screenshot for the pores. Well, not the pores, the people who can't watch the stream.
Ugh, I hate all of this.
I love it. This is great. I mean, it's
If Dark wins, I quit. I'm just never coming back.
Do you want me to just toss up I could just do a Monte Carlo at spot every week with like a 15-day look back. And then we could just avoid doing this every time.
You don't need, if you're going to assume the 15-day look back, you don't need to do the make the probability distribution. Get wrecked.
Not bearish Gherk, regular Gherk.
You see, JFresh, I was just going to do a straight line down to 4,800 end of week, but then you made the prediction for 4,800 end of week, and I was like, well, fuck that. How about I just completely inverse you?
The worst part is going to be when Bull Gherk and Dork tie for the win at the end of the week.
JPM collar.
Yeah, just stuck at the JPM collar.
It'll come down to midweek performance that really determines who wins, right?
Remember when we used to test the JPM color and then we'd get rejected 300 basis points?
Yeah.
I remember that. Those were cool.
They were cool.
Yeah,
I have a theory about that, actually.
Oh, yeah?
I mean, the JPM collar naturally pulls things up to it, and then once you go above it, both sides are hedging, so it does nothing. And so if you actually go back and look, the sold calls are, we like almost always test them.
Yeah.
That's almost a guarantee that we're going to test it wherever they put it. It's really weird. But it's just because all that delta just...
Yeah, it's just a shitload of delta. That's why when it rolls down, the market trends bearish.
Yeah. So yeah, we're gonna definitely hit it, I think.
But do we hit it? Do we hit it this week, or do we hit it Monday, Tuesday, Wednesday next week?
I mean, if bonds keep going down, it's now or never. Or sorry, yeah, bond rates keep going.
Yeah. If yields keep rocketing, this is we're gonna have to move up quick.
All right. Well,
that's where we're at.
Here's to another week of telling people on Twitter that they don't know what AI is.
Yeah, you've really gotten yourself wrapped up in the AI debate.
Because it's stupid.
Do you hate it? Like, I would just hate arguing with it. It's like arguing with Superstock. It's like beating
I am
yourself.
getting a little bit bored of it.
It's like beating yourself with your own knowledge.
Yeah. It is starting to become a little tiresome just because it's not going anywhere. But yeah.
It's
I'm
not
like,
gonna go anywhere until what's gonna happen is the AI bubble's gonna pop, and then everyone's gonna say, "Yeah, I knew it all along," and then you're just gonna have to sit there and watch them all self-fellatiate.
Yeah.
I sold near the top.
I
Okay.
knew this was a bubble, and I just made money. Did you sell?
Well, I did a poll and it got like 1,000 replies just about, and among people who claim they trade the AI stocks, over 70% of them, whether they think it's stationary or not, say it's a bubble, and only and like 15% or 20% almost say they don't know. So there's only like 11% of traders who think it's actually.
Well, those 11% are the fund strategists for Goldman Sachs and
I'm
JPM.
sure, I'm almost positive that none of them voted.
Yeah.
You're probably right, but
I mean, just among a small group of retail
No, we can't go
traders,
to
only like
SPX 5000 end of week. We either go to SPX 5000 at the beginning of the week, or we never test 5000 this week, so all the calls get burnt up. That's how the bullish runs work, right? We move up really hard, and then they run out of liquidity, and we flatline, and then all the bulls get burned for 2 weeks, and then they act like they were like long theta the whole time when it runs again, and they finally get their fucking 2 week options to print. That's what happened. That's what happened fucking when we were about to break the all-time high. Like all of the 4800s were going to expire that Friday. If we hadn't have broken the all-time high, bulls would have lost all their money. Cuz they were long 4800 for like 3 weeks. And it never even tapped it, and then it finally printed on the very last day.
beautiful. And now they have even more money to do it again.
Yeah. Now they have now they're gonna buy 5000s, and it's not gonna print until Feb 16.
I hate everyone.
I know, me too. All right.
I hate you, Jay.
I'm glad I was able to provide so many charts today. I feel like I've been slacking in the chart department lately, so I wanted to bring all the charts to the table.
There's some great charts, great talking points. I had fun.
All right, guys. Thank you so much for coming on. I
Yeah,
appreciate it.
always
Thanks for
fun.
having us.
I'll see you guys tonight or later. We got some stuff to work on this week, I think, actually. Maybe.
Yeah, I obviously have something to fix.
Things are happening.
I know, right? It's pretty exciting, actually.
Yeah, I'm actually torqued up.
All right,
I'm,
calm
I'm
down, guys.
Well,
I'm pretty bullish, but not on SPX.
I mean, the one thing you should be bullish on, you're not bullish on.
Oh yeah, I mean, yeah, it's you, yeah.
I'm going to
God,
spend a
I'm
lot
so
of this week assuming that every illogical thing that can happen will happen, and just see how much money I make.
there
I'll
you
probably
go.
get burned. The market will tank.
Yep. JFresh, I think, has it pretty much nail on the head, but his 50-50 call, I think, is a little ambitious. If he had said 5,000, I'd have been like, yeah.
Yeah. Well, I understand the 50-50. It is the trend. That is the long-term trend that we've never broken
Yeah, I guess so. But I
from
mean,
October.
I feel like we fail the test of the trend before we get there because 5,000 is a big psychological point, right?
Well, I think the problem with 5000 is you get all that gamma just collapses into the bottom of the JPM collar, and so you need like a shitload of momentum to push it above that. And you also get that like weird effect where everybody buys like the psychological level, like so they all buy the 5000 strike, but nobody buys 49.95, and so you can never cross 49.95 because all of the gamma like falls off into the major strike, and then the market maker starts hedging the other way, and they're fighting back against the market maker trying to get 5000. That's why I think it needs to happen early this week, otherwise it doesn't happen at all.
Yeah, and I mean, like, and since we're still above Vega neutral too, like the usual methods of just selling fuckloads of puts isn't going to really work out.
No, that fucked them eventually on Friday. Although they are getting a lot better at
They're gonna start
at
widening
not
out.
selling vol. But Friday they were
Yeah.
buying so many fucking calls all day that they literally just outpaced the vol sellers. Like
Yeah,
there
I
was
think that's
plenty of
definitely
short puts
Yeah.
Friday. It was just there was so much fucking call
Yeah.
volume. And
Definitely
it did not stop.
the headline on Friday was call buy.
Yeah.
Yeah.
It was
All
just
right, guys. Well,
relentless. Yeah.
Right.
Let's
see you
mark
guys
it open
tonight.
tomorrow. See you in the morning. Have a good one.
Yeah.
Futures in 2.5 hours. See you
Yeah.
then.
Yeah, I'm already long VX. So
All right.
All right, later, guys.
See you
later,
guys.
guys. All right, thank you guys all so much for tuning in. We have duration auctions. Yeah, we do. Jesus Fish, a little bit. SCX 5000 end of week. SF, you might meant Inner Richmond or Sunset. Yeah, I think maybe it's Inner Richmond, Sunset. Yeah, it was one of those. I looked at the map earlier. I found it. I just can't remember what it was again. Sounds like edging. Well, I mean, it's just kind of the nature of like those big strike prices like that. All right. Thank you guys so much for tuning in. If you have any questions that I didn't get to on the stream, I'll be around the computer for the rest of the day. So feel free to reach out to me in DMs. If not, I'll have Pickles Picks out tonight. We're going to start picking up some equity positions again in Pickles Picks now that we're kind of past most of the Mag 7 earnings. We do have to be a little cautious of sympathy moves, so I'll try to post like the major earnings this week, but they shouldn't have as much of an effect. And so yeah, I'll start looking towards equities again a little bit, especially as correlation starts to break down. That's where equities start to get a little bit more exciting, at least for short vol and short positioning. So that could be kind of fun. Yeah, there'll be some call selling opportunities while they're still overpriced, I think. And I noted a couple of them earlier on the Mag 7. I think there's some opportunities there, and the Mag, the baby 15. And I might go over a couple of those tonight. I definitely want to throw up a write up on Netflix. That one looks really good. The Caterpillar looks like it's starting to peter out, but I don't like shorting Cat. But that might be more important broadly for Dow. But yeah, I'll throw some of those up tonight, and then we'll get some more throughout the week as conditions change and we get past this kind of like weird blowout that we had on Friday. And then for everyone else, I'll see you tomorrow morning. Enjoy the rest of your weekend. Later, guys. I waved and the thing didn't start. What the? Really? Hold on. There it is.